A good day to the doctor and my fellow friends. My name is Lim Ming Xiang. My metric number is 287224 and I'm from class BWRR 3123 Corporate Governance Group A. And I'm going to present my assignment as a title An Analysis of JNT Express in Malaysia from year 2017 to 2021 by using internal and external factors using corporate governance perspective. Next, the problem and issues in this study is a sound corporate governance consists of 7 concepts which are transparency, independence, accountability, responsibility, fairness, reputation, and social responsibility. And we can know that JNT Express didn't achieve certain requirements, for instance, fairness, less than 30% women in board. Next, for the research objective in this study, which is to determine the internal or firm-specific variables that might affect JNT Express performance, and to investigate the external or macroeconomic factors that might affect JNT Express performance. Third, to identify the internal and external factors that might affect JNT Express performance. And for the research question, is there any relationship between the internal factors with JNT Express performance, and is there any relationship between the external factors with JNT Express performance? And third, is there any relationship between the external factor and internal factors with JNT Express performance? Next, literature review. In my study, there are firm-specific factors, company performance, operational risks, credit risks, market risks. And for example, operational risk refers to how a firm runs rather than what is created or fundamental in the sector. While there is no guarantee that the risks will lead to failure, lower output, or higher total expenses, they are perceived to be larger or lesser depending on internal management decision making. In order to indicate that operating expenditures as a proportion of sales have decreased, it's desirable for the operational ratio to be dropping. For the internal factors in this study, which is return on assets, return on equity, quick ratio, average collection period, debt to income, operational ratio, operating margin, corporate governance index. And for internal factors, which is gross domestic product, inflation rate, interest rate, exchange rate. For the methodology, the annual reports for JNT Express from 2017 to 2021 were used as the source of the study sample data, and we are using SPSS to analyze the data. And there are 13 observations. For internal factors, is using information from the income statement and balance sheet in JNT Express annual reports. Financial ratios such as ROA, ROE, current ratio, average collection time, debt to income, operation ratio, operating margin, and CG index. Next, external variables like interest rate, unemployment rate, exchange rate, and inflation, and are sourced from the official website of the IMF and World Bank. And the influence of the independent factors on the ROA might be proved using the following regression approach, which is linear regression model ROA with internal factor, and linear regression model ROA with external factors, and last, linear regression model RA with both factors. For the descriptive statistic, a sort of data analysis known as a descriptive statistic explains or presents significant information allowing for the exploration of patterns. The dependent variables RA and independent variable are shown for the table, and the mean is displayed in the second column. The standard deviation for the of the independent variables and dependent variable RA is projected in the third column. For example, the RA is 0.11 as a mean, implying that this company's financial performance is close to 1%, while the standard deviation is 0.003, indicating little profit volatility over the next 5 years. And for example, the ROE is 0.07 for the mean, is showing that this company's financial performance is near to 7%, and the standard deviation is 0.022, indicating the profit volatility will be low over the next 5 years. For the table correlation, debt to income have a very high negative relationship with ROA, with size of negative 0.985, and it means that as the ROA increase, the debt to income will decrease with more. However, with size of 0.005, this reflects a negligible correlation with ROA for CGI index. It implies that the CGI index have no effect on ROA. For the module summary, this study shows that out of 20 variables, only CG index, current ratio, operating margin, and interest rate contribute G&T Express financial performance or ROE with an adjusted R-square of 0.921 or 92%. In contrast, the remaining variables irrelevant to this study. Next, for the ANOVA table, the significant level of p-value for ANOVA is 0. This value denotes that this regression module has no variance, implying that the regression module cannot significantly predict the outcome variable, implying that the independent variable of selected internal and external factors cannot affect the ROA of G&T Express. Next, for the coefficients table, this study displays the current ratio and average collection period is negatively moderate significant with p-value of 0.261 and 0.250 respectively. According to the Corporate Finance Institute (CIF), if the ratio is decreasing, it means the company is effectively cutting operational expenditures while boosting revenues. In general, any reduction in business spending serves to increase profit. Furthermore, with the p-value of 0.111, the exchange rate is positively significant to ROA. The combined analysis of the independent factors demonstrates that each one significantly affects the dependent variables or ROA. As a result, the dependent variable of ROA is influenced or impacted by these internal and external independent factors. For the limitation, the annual reports of G&T Express from 2017 to 2021 was the sole data source for this research. Due to time restrictions, only a limited amount of information can be accurate to this research. In conclusion, the company might undertake a variety of actions to get ready for the downturn the next year based on the result of Chapter 4. The correlation coefficient indicates that three variables have a negative effect on ROA, and J&T Express should balance the effectiveness of these three factors in order to increase performance. In the scenario, J&T Express has a higher operating ratio as compared to the baseline, and to lower the debt-to-income value improves the company's performance, notably ROA.